Good morning. My apologies for being late.
Good. I trust you're doing well.
Well, trying.
You're
Thank
trying.
you.
Oh,
I said yes.
okay. All right. I pray it gets better. All right. We'll start. Tishana is running a bit late and will just be with us for a few moments. All right. So we were chit-chatting a while ago, hoping that you had a good holiday weekend. I know, like for myself, as I said, I wish I had another day of holiday, or even a week would do good, but a day I would take it right now. But we come to the end of the group presentations. With me tomorrow, you will have your tax session with someone from tax admin. So today we will be looking to close off with personal payroll taxes, how you calculate your personal payroll. And then I will be going through a demo of QuickBooks Online. So that's what we will be doing today. Now, for the past couple of days, we looked at some basic accounting principles, as I said before, not to make you professional accountants, but to make you aware of what you need to do in your business to ensure that your records are up to date, and also how you can pretty much look at what is presented to you to see if you can make sense of it, to see how your business is doing, to see how your accountant is doing. We started off by looking at the different business types. We looked at the advantages and disadvantages. We also looked at the accounting cycle. Can somebody just run through and just tell me what the accounting cycle is? We won't be doing any polls today. So the recap is going to be more in terms of question and answers, right? So can someone tell me what the accounting cycle is again? What's the step?
Journal, general ledger, trial balance, financial statements, and source documents.
All right, you got all of them, but we start from the source documents. Remember, that is where we start from. That is where we gather all our information, and then we put them together in order to go through the process, go through the cycle, and get to our financial statements. So we just need to remember, Abiathar, that we start at the source documents. If the source documents are not correct, if they are incomplete, then your financial statements at the end of the day is going to be incorrect or incomplete. All right?
True. Yes, miss.
True. All right. And after that, we looked at some transactions where we picked some information from source documents, and we did some journal entries, and we walked straight through to the financial statements. And the financial statements we looked at, who remembers which three financial statements we looked at?
The journal entry, the trial balance.
Now, the financial statement. So we're at the end now. What did we get after we had our journal entries and our trial balance? We'd have got our financial statements, but we looked at three of them.
The balance sheet, profit and loss, and the cash flow statement.
That's correct. Good. So at the end of the day, we looked at the balance sheet, the cash flow, and the profit and loss statement. And we also looked at an example from Spur Tree Spices, Jamaica, and you saw what their balance sheet looked like. And we were able to look at that balance sheet, income statement, and cash flow, and just pick up some things from it to see how they were doing as a company. And we also pointed to another section that's usually included in financial statements, and that was the notes to the financial statements, which pretty much tells us about the makeup of particular items on our financial statements, whether the cash flow, profit and loss or the balance sheet. All right, so we went through those. Did anybody go over those, the slides and the financial statements that we looked at? Anybody looked at them? Any questions from them? Any applications you can make to your business?
Actually, I have to pull them up right now because I'm traveling and leave my book with my notes. So that is even how I can give some of the correct answers right now. Because yes, we should be recapping, guys, for sure.
Yes,
And
miss. So I had a look at separate, right? I had a look at separate reading the slide, and I have a question in regard to trade and receivable, right?
right.
Um,
Trade
I
receivables.
I am right. I am seeing it listed as current assets. Could you
Mhm.
please explain that a little bit for me?
I want you to explain it for me. What do you get from that?
Trade, miss. Trade.
Mhm. Trade is really just the operations of the business. So that's another name for receivables. Some people will call it accounts receivables. Some will call it trade receivables. Some will just say receivables. It's the same thing. So it's just receivables generated from the business, the nature of the business, the trade then, using back the same term. The nature of the business, the same business, the trade.
Okay, miss. I thought it was different from the receivables, miss.
It's the same thing, just different terminology, but it refers to the same thing. I remember it's an asset, so it belongs to the company. The company owns it, and it's current because you're expecting to collect it within 1 year.
Oh, yes, right, miss.
So that's what makes it current.
Right, and this is money owed by customers to your company.
Correct. And you expect to get it within a year. So it's current. All right, so let us look at the accounting equation. Do we remember what the accounting equation speaks of?
That's our assets equal liability plus equity.
That's correct. So the assets equal the capital plus the liabilities, or equity, as Matthew said, capital or equity plus the liabilities. And remember, I was doing it in just a simplistic term where I said, if you have assets, things that the business owns, then you must get it from somewhere. You either inject it in the business of your own resources, which would be capital, or you borrow it. You could borrow it from yourself, in which case the business would owe you as the owner, or you could borrow it from somewhere else. It could be family, it doesn't matter. It could be the bank, it doesn't matter. So that's a liability. So in order to own something, you have to incur a debt one way or the other. Capital, either via capital or via a liability. So assets equal capital plus liability. So, and we also looked at the terminologies in terms of what assets were. Assets are what the company owns, liability what the company owes, and capital would be what is injected in the company by the owners. And the owners could be one person, it could be other shareholders putting together to contribute capital to the company. All right, any other questions on that?
Good.
All right, and we also went on to calculating the taxes due for a sole trader, and we worked out some examples there. All right, so today now, we are going to just go through calculation of personal pay. If you have an employee or if you are employed, how do you calculate that pay? We're going to do some practice exercises, and then we're going to take the rest of the time to go through QuickBooks, which is an online software, highly recommended, highly used, very user-friendly. So for those who don't know QuickBooks, we can look at that. For those who already know QuickBooks, then you can assist with the teaching. All right? So that's what we're going to do today. Tanisha and Nicholas, I trust that you are with us, hearing us.
Yes, I am still here.
Okay. You're in class, Nicholas?
No, not in class today.
Oh, you're not in class today, so you need to participate then, man.
Yes, you have my undivided attention.
So talk to me now. Do you have any questions with regards to the recap I just did, or from the previous classes, any other notes, or so do you have any questions?
No,
Any
not as yet.
application?
I'm going to go through all of the videos when I have the, well, today, but I didn't get a chance to go through them.
Okay. And Robert and Colin, the slides are available, right?
The site should be available.
Okay. I heard, I think Abiathar was speaking of one of the slide with Seprod. I think that was day one. I remember that there was a new slide. So could you replace that with the new one that has per tree?
Okay.
All
right, I'll do that.
Okay, thanks.
The document with spur tree was put into the homework section.
Okay, well, however best you guys do it.
Oh,
but
no
but
problem.
it's the spur tree one, that's the current one.
Okay.
Yeah, thanks. All right, so Tanisha, you're good?
Yes, I am. Yes, I am.
Okay, you're following, and any questions?
Yes, I'm following. To be honest, I am familiar with all these things. It's just
Okay.
basically to recap on them, as I did accounting. So it's just to recap on them.
Okay.
Yeah.
All right. But if you can just interject every now and then. Let us know that you're with us.
Okay, no problem.
All right. Okay. So we're going to look at the calculation of personal pay right now. So in the previous class, we looked at how to calculate your taxes on your, as a company, right? But now we want to look at it in terms of you being an employee or where you have to pay employees, right? So just a note on income tax itself. That's what we call PAYE, right? And if you have pay slips, then you will notice the income tax or the PAYE on your pay slips, and that is calculated at 25% of your taxable income. And when we get along, we're going to see what taxable income is. But the government allows us a tax-free threshold. Now, that tax-free threshold means that above that amount, that is what the tax is calculated on. So if you get below whatever the tax threshold is during the period that you are calculating the pay, then you will not pay tax on your earnings. All right. And then we have income that is over $6 million currently is subject to 30% tax. So we have two rates that we're working with now, 25% and 30%. So as long as you're below 6 million, you'll be subjected to the 25%. But if you are below the threshold, you won't pay PAY.
of 1.7, right?
Right, the threshold is now 1,700,088. It is not exactly 1.7. Right, so for now it's 1,700,088. All right. So let's go. So we're going to look at how to calculate the pays, the net pay. We're going to look at what is the liability for the company. Because one of the things we need to remember is that as long as we have employees, then we are required to pay taxes based on what the employees would have earned. So
one second, Miss Karen. Can you
Mhm.
just flip back to the previous screen? 1 second, let me just take a note. Thank you.
I
Okay.
can go? Okay.
Yeah, thank you.
Mhm. Right. So as I was saying, as long as you have employees, then you are required to not just pay the employees, but you are also required to pay over to tax administration a portion based on their salaries as statutory obligations, right? So let us look at it for a moment. And this is contributions only because you do not pay PAY, you do not match PAY on behalf of the employee. So let us look around. Oops. All right. All right, so we're gonna look at an example here for an employee, Daphne Reed, right? And Daphne Reed is earning $495,000 for the month, right? So now we're talking about month. When we were doing the calculating for the for you as an sole trader or entrepreneur, sorry, I'm just switching my slide at the same time. We looked at it at the end of the year. So now we will be looking at it for a month. So it means that our threshold is going to be based on a monthly basis rather than a yearly basis. Just give me a moment here. Let me just bring up the worksheet. I want to share the worksheet with you as well so that we can follow. It's just a moment. Oops.
Morning. I wanted to ask Colin if he would upload all the different worksheets and resources that you shared with us in the Google Classroom.
Colin and Robert, that's your question.
Sorry, could you repeat the question?
No, I was there are different worksheets and resources that Miss Bloomfield share over the training. So I was wondering if you have like a collection of them, could upload in the classroom.
Yes.
Okay.
All right, so let's look at Daphne Reed. I'm going to put the Excel sheet so we can see. All right, are you seeing the Excel sheet? I'm not sure where. Let me see what my screen
I'm seeing
is.
an Excel sheet, Daphne Reed monthly net pay calculation, March 25.
All right, correct. So this is the spreadsheet that we're going to be working through, which I had on the slide. So you would have seen this slide. Now that's the workout. Now we're going to look at all the formulas and so on. So Daphne Reed would have earned $495,000 as her gross pay for the month of March, right? Now, if you look over on this side, just a little distraction here. If you look over on this side from column A right here, you will notice that in 2024, I didn't write 2024 here, so this is actually 2024, 2025. There was a split in terms of what the threshold was. So for January 23, 24, for January to March, the threshold was 125,008, which was based on the $1.5 million threshold, right? Sorry, it should be 23, 24. And then in April, the threshold changed to the 1.7. So it would be 141,674 per month, right? Which is what we will be using over here under the 1.7 million. All right. So ignore that distraction now. I will move it from there. All right. So the basic pay, $495,000. And you know that as an employer, you're subject to NIS, PAYE, NHT, education tax. That is what you pay from your earnings as an employee, all right? Or if you're running somebody's payroll, your employee, that's what you're supposed to deduct from them.
Right, no matter whether it's a business or a company or what, once you're employed,
Yeah, once you're running payroll for somebody, so if you're paying somebody and you're going to calculate their pay, they need to pay this. If you are employed, when you get your pay slip, you are supposed to see these deductions. Right? Whether you are being paid as an employee or you're paying somebody as an employee. So this just applies to the employee. All right? So I hope you can see the screen and let us try to follow along. So the NIS, right? That is right here. You can see the NIS is calculated at 3%, right, of your pay, and that is as long as it is below. Let me try and say it so I don't confuse you. There is a maximum for the NIS, right? A ceiling for the NIS. You cannot calculate that 3% on any earnings above 5 million for the year, right? So if you earn above $5 million for the year, which is really 416,666.67 per month, as long as you earn above that, your NIS is going to be just 3% of whatever you earn.
What if you earn below the 5 million?
If you earn below the 5 million, it is going to be the 3% of whatever you earn.
Okay.
Low is 5.
Say that again. Say that again.
Okay.
It's Karen. If it's over 5 million, you only get taxed on
5 million. Stop. That nobody else
and
goes
there, and
above
that's
5 million.
And then before 5 million, right
It's
up
based
to
on whatever you earn.
right up to 415,666. Right?
41666. The 41666 is really 5 million, which is for the year,
Which is a max 5 million.
divided by 12. So that is what it is per month. Remember, we're running the payroll per month.
Okay.
Yes?
Yes.
So if you have earnings above this, then all you pay is 5% of this. So $2,033 per month. That's it. Hold on. 5 million for the year, right? 3% of whatever that is. All right. So here The 5 million divided by the 12 at 3% would be 12,500 for this person because he's over the 416,666. Right? If he was below, it would be just 3% of it. But as long as he's above it, then it's 3% of the 1/12 of the 5 million. Tell me if I'm confusing you.
No, man, you're actually making a lot of sense because it was confused before.
Okay.
How the number ended up there.
Right. All right. So if you look in the worksheet, I work it out here. Because he's over the 5 million, it is 3% of that 5 million max. So if you get your pay slip, if you're earning over 5 million and you get your pay slip and you see anything over this 12,500, it means that it's not calculating properly because you're not supposed to pay more than that. All right. Then now we come to the NIS, the income tax, sorry. Remember the income tax is the same as the PAYE. Now, how do we calculate the income tax? Look down here, and I worked it out here, right? This is what I work out in order to get the 85. So the PAYE or income tax is based on your taxable income. And how do you come by your taxable income? It is your basic pay, which is this. You get an allowance for the threshold. And remember, we are doing it per month. And for the year, it is 1,700,088, which works out to be 141,674 per month, right? Always remember that it's per month we're doing it. So you take the basic pay for the month, you minus the threshold for the month, which is the 141, and you minus the NIS. So you get the NIS tax-free, right? Now we also
If
have
you
another
make
one.
less than 141 a month, non-taxable.
Right.
Okay.
I have a note here. So if the monthly salary fall below that or per week, then you or this amount per week, then the person will not pay PAYE. Right? So when you're going to calculate the PAYE, you take your basic pay, you take out the threshold, and you take out the NIS, and you take out pension. We're gonna look at one with pension, but let's forget about the pension for now until we get to the other exercise, right? And then this is what is going to now become your taxable threshold. See there, the 495, you take out the 141,674, and you take out the NIS, which you would have calculated here. And this now becomes 348,260, your taxable income, and it is on this that you are going to pay the 25%. Right? So if you look here, this is what I calculated, and I multiply it by times 0.25, I get the 85,206, which is up here, right? So just look at it again. Your taxable gross was this, your total taxable gross was the 495. You do not just calculate 25% on that.
Right, you have to break it down.
Make allowance for the threshold. You take it out, you take out the NIS because tax is saying, okay, this amount you don't pay tax on and you don't pay tax on your NIS. And so it is just a difference that you pay the tax on, right? So we calculated the NIS and we calculated the income tax. Then we go to the NHT. The NHT is 2% of the gross. So the NHT is just, see the formula here? 2% of this 495. That's how you get your NHT, right? And then for the education tax now, it is the gross and you get an allowance for the NIS. So it is going to be, and the formulas are in the worksheet, it is going to be the gross minus the NIS, and then you apply the rate to it. And that is what gives you your education tax. Everything here is what would be payable to the government. This entire 190, so of your 495,000 that you would have earned, you need to pay over 118,000 to the government. And this is the breakdown. 1,200, 12,500 going as NIS, PAYE is 85,206.50, NHT 9,900, and education tax 10,856.25. At the end of the day, the difference is what you take home, which is 376,537.25. So that is what you would have as your take home pay. Any questions?
All business or company carry the same percentage,
Yes,
and all business structure, business type, no matter how you register your business, unless it's charity.
as long as you have employees, this is what you're paying, calculating on the employee's pay, on the employee's earnings.
Understood.
So as long as you're going to pay somebody, you need to work out your pay like this, because as an employer, you are obligated to pay deduct taxes from the employer's pay and pay it over to the government. Right? And you can be held accountable for it, because if you don't pay it over, then the government is not going to go after the employee. The government is going to come after you as the employer, because as long as you state when you formed your company, you would have done up your form to say, I think there's a section on it that says, do you have employees? As long as you check it to say you have employees, then the government is expecting that you will be paying over some monies for employees. Now, if when you were doing that form, you didn't check it, you said, no, I don't have any employees. Or sorry, you said you had employees, but you did not have any employees. You are still required to file a return to say 0 employees.
Okay.
So we have to be mindful of when we are forming our companies, what we are ticking on the forms, because we are creating relationships with the government. If you say you have employee, they expect something from you, whether it is in the form of a nil return, meaning that I don't have anybody, even though I said I would. Or if you have persons, then you need to be submitting your returns and paying over the taxes. Right? You will hear some persons say, okay, they went to NHT and they said that nothing was filed for them or whatever it is. Yes, and it is because as long as you have your pay slip to show that that was deducted from your pay, then the employer has the responsibility to pay it over. Right? Is that clear?
That's it.
Yes, Miss, thank you. I sent a message in the chat.
Oh,
All right.
let me see. Okay. Have a good one.
Yeah, man.
Yeah.
I will.
Okay.
All right. Thank you.
All right. Good. Bye-bye. And Tishana, I think
Yes.
Colin should be
Schedule the one-to-one.
schedule.
Yes. Yeah, man.
Okay. All right. Catch you.
All right. So we'll catch up in the one-to-ones.
Yes.
I'll try to listen to all of this before that.
Yeah, man. No problem.
Mr. Shauna,
Yes, Colin?
remember we have a session with TAJ tomorrow.
Yes. At what time again?
It's at 9.
Okay. I thought that
Yeah.
that's the one that was today, because I came on looking for TAJ.
So that's tomorrow at 9.
All right. No problem.
All right.
See you then. Bye-bye.
Okay, Tishana. Bye. All right, so that was our net pay calculation just with the basics, NIS, income tax, NHT, and education tax. So let us look at it. Suppose Daphne was making a contribution to an approved pension fund. I trust you can see. All right, so it is similar to what we had before. Our earnings are the same, but this time she is now paying pension. So the pension is an allowable amount for tax purposes. So let's go. Here's my slide. All right, so here we are now. All right, so what we had there is similar. And I need to fix this because now she has pension of 10,000. Right? So our tax threshold, our taxable income is now going to be different. So let us see. Are you seeing what I'm doing? Are you seeing what I'm doing? Nicholas is seeing what I'm doing?
So you get back the income
Yes,
tax.
I'm seeing.
Okay, you're seeing. Okay, so it's similar to what we had before. So our basic pay is the same. The income tax now is going to be a bit different. Why? Because in calculating the threshold down here, we now have the pension to contend with. So the pension is an allowable deduction, meaning that you can take it out before you calculate your tax. So it's going to be the 495 minus the threshold, minus the pension, minus the 12,500 that we had calculated for NIS, right? So if you notice, what the taxable income is 330 now, instead of what we had around here of 348.26. The difference is that 10,000. So you're going to be paying less tax. So as long as you contribute to a pension scheme, an approved pension scheme, then you are able to apply that to your taxable income. And so you'll end up paying more, less tax. All right. So in this case, it is now going to be 82,706.50, whereas previously it was 85,206.50. All right.
So on the statement, they don't put like minus pension, that you just put pension. It's like how you have them there together, income tax, pension, NIS, NH. Is
Where
it
you
always laid out in that format? It don't tell you that you must deduct this.
on the
Deduct
pay slip itself?
Yeah. Yes.
No, okay. So if you notice over here is what you earn. The basic pay here is what you earn, and everything here, so these are all your deductions.
Yes.
I don't think that's what you mean. But then in the formula here, I made a note down here to say your taxable income, it is going to be, okay, look at this. Look at what I have here. Here, I have that this is your taxable gross pay. Let me call it taxable income. So I'm using like terms here. So let me call it taxable income, right? So here, your income tax is your taxable income at 25%. All right. And down here, I explain what taxable income is, which is here. Your taxable income is your basic pay minus the threshold, minus the NIS, minus the pension, which is what I worked. I don't know if the screen is big enough. When I do this, I'm getting a part of a screen. So I hope it's not too small for you here. All right, so here, you'll notice that the taxable income, as I have it written here, is the basic pay, which is the $495, minus the threshold, which we had worked out here to be $141,674, minus the $10,000, which is the pension, minus the $12,500, which is the NIS. And that gives us $330,826. This here is our taxable income. Right? And it is on that taxable income that we calculate the 25%, which was, I just worked it out there to show you. 25% are a quarter, right?
Got it.
I'm trying to go a bit slow because I want you to understand how it is that you are going to calculate somebody's pay when you have them working with you, right? So I want you to get it. So let me know if there's anything on this that you're not getting. It's similar. Just remember that when you're calculating your PAYE or your income tax, you need to take out your threshold, you need to take out the NIS, you need to take out the pension if you have one before you apply the 25%, right? And all these things will come out of your income, and it will now give you your net pay of $369,262.25. All right, so that was Miss Reed with her pension. All right, we're gonna look at Miss Reed in a different light now. Not in a different light, really, but Miss Reed is an employee, so it means that she must have an employer. So this pay that she got, let us see what the employer is obligated to pay over to the government, right? So the employer is going to take something out of the person's pay, but they are also going to match it. All right. So let's use the worksheet. This is the slide, but let's use the worksheet so I can point to the formulas. All right, let me try to make it a bit bigger. All right, so this is Miss Reed. I didn't use the one with the pension. I'm now using the one just with the NIS. All right, so I'm assuming she has no pension. So this remains the same from the first sheet that we looked at, right? We had our pay calculated. Now the employer, as I said before, has an obligation because he has an employee. So the employer is required to pay to the government 3% of what the person earned, right? So he's pretty much matching what the employee pays as NIS. So and based on the earning here, remember we spoke about if it was above the 5 million or 41666.67 for the month, then they would stop right there. They wouldn't pay anymore. So the employer would match that NIS that the employee pays. So the employee pays 12,500. The employer is going to pay 12,500 as well. The employee pays PAYE. The employer does not pay PAYE. So they won't be matching anything. The employee pays 2%. So please note the rates because these are not my rates. These are the rates that the government has set, right? So the employee pays 2%. The employer is going to pay 3%. Now, note, this is all based on this one person's pay, right? For education tax, The employee pays 2.25%, and the calculation is the same. It's just the rate that differs, right? So the employee pays 2.25%. The employer pays 3.5%. The employer pays part of 3% of that gross pay, but the employee does not pay. So the difference is the employer does not pay PAYE, only the employee pays that. And the employer pays HART, but the employee does not pay HART. So what do we have here? For an employee who earns $495,000, the employer has to pay over to the government on behalf of the company $59,087.50. So as long as you have an employee earning this much, you will need to pay over tax of that amount for that employee. Got it? So when you're employing somebody, don't just think that you're going to have to just pay the naked amount that you're paying the person. You have to think that you are going to be paying a portion of taxes on their behalf. Is that making sense?
Yes, it is. Yes, it is.
All right, so you need to take that into consideration when you're employing a person to say, okay, I'm going to have to pay over that portion to the government on behalf of that person. So then, when you are going to file your returns now, you are going to make a payment to the tax office of what you took from the person's pay or what you withheld from the person's pay, plus your obligation, right? So you're going to take your piece that you withheld from the employee plus your piece, and you are going to pay it over. So you're going to pay over to the government $25,000 for NIS, the piece that you withheld plus the piece that you are required to pay over. You're going to pay over the $85,000 as income tax. You're going to pay over $24,000 as NHT, $27,000 as ed tax, and $14,000 as hard contribution. So for this one employee, you have to make a payment over to the government of $177,550.25, which is a combination of your contribution plus what you will withheld from the employee. We getting that?
So you're saying that the 177,000 is the employee's tax plus yours combined?
Right. So
Mhm.
look back over here in E. Based on this person's pay, 195,000, tax and contribution came to $118,000, which you need to pay over to the government. Yes. However, you have an obligation to pay over some as well on behalf of the employee, on behalf of the business then, of 59,000. So you have the 59,000 for the company plus the employee portion, and that gives you $177,000.
Noted.
So when you're filing your returns, you're not just looking at it to say, okay, this was what you withheld from the employee. No, you have to match it based on the various percentages that I said there and pay over the full amount to the tax office. We got that?
Yes, I did. This is monthly, right?
This is what?
Monthly.
Monthly, yes, this is a monthly payroll.
Okay.
and you would pay it over the 14th of the following month. So if this is from March, you would pay it over by April 14th.
Okay.
All right. So,
Question, Miss.
I'm hearing.
Right, Miss. Thinking about how to structure it, Miss. Just a moment. All right, Miss. It was with the same 117,000, Miss, but I think I get it from the explanation that you gave to Nicole.
Where you say 117?
177. Sorry about that, Miss.
Okay, right. So just remember, as the note says, the total to be paid to the TAJ is the employee plus the employer portion. The employee portion is in E here, so, and the employer portion is in J. So two of them added together to give the 177.
Yes, Miss.
All right. So then, this here below is just a journal entry to show, because you remember, everything that you do in your business needs to be recorded, right? So just focus on this side from each coming across, right? So this $59,000 which we have allocated here, this is rounded up. So this 59,000 here is actually an expense in your books. So you have to record it as an expense. And remember, the expense has the debit entry and it is going to go against your profits, right? And then you need to record these amounts that are payable to the government. So these are liabilities and they have a credit balance, right? So you record the expense and then you record the liability to the government. This is just the employee's portion, right? The employer's portion, right? So don't just pay them and forget about it. You need to ensure that it is recorded in your accounts. And then down here now just shows how the full thing would be recorded in your books, right? Down here. So let me go to this slide so you can see better. Right, so this is the full journal for the accounting. So you record the full $495,000 that the person earned as salaries, not the amount that you pay them, the entire amount that they are entitled to, that you're contractually obligated to pay the person, right? So your contract would have stated that this person earns $495,000 gross. That is what you're entering here. And then and that's an expense. And then you're also recording the amount that the employer would pay, which is what we had looked at before, that we had looked at here. Here so, or here so. We record these as an expense. And then this now would be the total obligation. We have the 85,000, all of these I had worked out here. So it is all this entire 177 now, we have to journalize it. So it's $85,000 total for PAYE, NIS total, education tax total, NHT total, and the 14,000 total. The difference now is the net pay, which is due to the employee, right? And if you notice, your journal is balanced, right? So every debit have a credit entry. And so we owe the government everything from the 85,000 down to the amount for heart, and we owe the employee the 376,000. So we pay some to the employee and we pay the rest to the tax authorities. All right? So what do I want you to get from this? What I want you to get from this, several things. The salaries that you're going to record in your accounts is the gross amount, not the net amount. your employer, as an employer rather, you need to pay over your statutory obligations to the government on behalf of your employees. And these statutory obligations are cost to your business. And everything that you deduct from the person's pay plus what you match must be paid over to the government, and the difference must be paid to the employees. All right, so that's that. Have I managed to clear up anything for you or make anything more confusing for you that you have a question? Should I assume that we are all good?
Well, no, me good.
What you say, Matthew? You are good?
I'm good. Good like good.
Okay.
Love them segment, yeah, man, because I'm not used to them. You know?
Mhm.
Yeah, man, so definitely taking a lot in these sessions.
All right. So we're going to look at another employee. This is an assignment for you. So I'm giving you guys 5 minutes. That's short, right? And I'm going to put the example. I'm not going to put the solution. I'm going to put one of the examples there. And I want you to look at Jody Green. She earns $150,000 per month in her current job. So I want you to calculate her currently the payroll for her net pay. What are the deductions for the employer? What the journal entry is, and what the full recording should look like. So I'm gonna move back and I'm gonna just put up one here. I'm gonna put it up in the Excel sheet. So you can just look at it. I'm not gonna show you here. All right, there you go. So you're doing Jody at $150,000. Please work out her statutaries and let me know what should be recorded for the employer and what the payroll, what the journals should be for your accounting records.
I don't think this is the Jody one, you know.
This is not Jody one, but I'm just showing you what the example is. I'm not showing you the solution yet. So the only thing you need to know is that Jody earns $150,000. This is just an example based on the one we did before. So I'm giving you 10 minutes. So by 10:19, Robert, I'm going to share this sheet with you that you can put up for me here.
Miss, could you please clarify how much money Jody earns, please?
$150,000 per month.
Thank you so much.
Robert?
Can I skip
Colin?
at the next page, please, with the questions?
Yes. I didn't hear the
Okay.
question.
Who is talking to me now? Robert?
Yes.
All right, I'm going to upload a sheet. I'm going to send a sheet to you that you can share. Oh, but I can share it, right? I can share it. I'll drop it in the chat.
Okay.
I'll send it to you afterwards, but I'll drop it in the chat so that they can use it.
All right, no problem.
Okay. All right, I'm going to drop the sheet in the chat. So you can pull up the sheet. You can use it as an example. Use the chat button. The chat button. Attach on the computer. All right, so I've dropped the sheet in the worksheet there. I have the solution on it, but I've hidden the sheet, so please don't look at it. I want you to practice on your own before you look at the answer. Sorry, I'm gonna put that back in a moment. Let me just attach this file. All right, Robert, I've sent the slides and the worksheets. You can attach them when ready.
Okay, cool.
Yeah. All right, so it's just Abiathar, Matthew, and Nicholas in class right now. Oh, Tanisha is back. Just, did you get the slides that I sent in the chat? Okay. Not sure what's happening there, Matthew. Sure, what's happening there? Abiathar, are you able to open those sheets? Nicholas, are you able to open the sheet? Okay. All right, Matthew. See if you can follow on the screen.
So Miss Karen, I am finding out
Mhm.
what is the annual salary for this 150,000, and
No,
then
not the annual salary. What you want to know is what you're going to pay her. So she earns $150,000. At the end of the day, how much are you going to pay her?
by deducting these taxes
Right.
first.
So you're going to calculate the taxes, and then at the end of the day, you want to know how much you're going to pay her, how much you're going to pay over to the government, how much is it that you're going to pay on behalf of you as the employer, and how we're going to record it in our books.
Right, from NIS to heart.
For the employer.
Right.
Okay, Nicholas, I hope you can follow on the screen and do the calculation. Seems to be a software issue. We have a minute. All right, all right, all right. So let's go to the solution. Are you seeing my screen?
Yes, Miss, we are.
All right, thank you. So let us look at Jody. Jody Green. So Jody Green earns $150,000 per month in her current job. Calculate her monthly pay. What are the statutory deductions for her employer? What is the journal entry? Because you want to know to enter it in your books. And what is the journal entry for recording everything in your books? All those salaries need to be entered in your books. So let us look at the solution. Who wants to go first with calculating the NIS? All right, for whoever it is can open the sheet. I think it's probably just you alone, Abiathar. If you
Yes, Miss.
right click on the tab below and you will see unhide sheet and you will see Jody Green, just say unhide and you will see the solution there. I hid the sheet from you. All right, so let's go over. I'm gonna pull it
Just a
over.
moment, Miss.
And the NIS should just be the 3% of that 150,000.
Why?
Is that correct?
No, you tell me why first.
Why?
Say again for the instructions, Miss, on how to access this stuff, please.
All right, give me one moment, Matthew. Think of your why. So right click on where you see the Daphne Reed and so on. Just right click and say unhide. And you will see the name of some sheets. Just choose Jody Gray. Look at me, look at the screen. I'm right clicking and it's going to look like this. You're seeing?
Yes, Miss, I'm following you, Miss.
And then you press unhide. Mine is grayed out because I have nothing hidden. All right, let me hide it and then unhide it and show you. So I right click and then I go to unhide and then I will see the sheets that hidden. I select the one I want. So I select Jody Gray and I say, okay. And it will come up.
Oh, Miss, what was happening, Miss? I did not enable editing, Miss.
Oh, okay. Tanisha?
I am here. I'm here. I'm
Okay,
here.
I'm just checking some. Are you scrolling, typing on the screen?
No, I was driving and I'm using my phone, so I can't do the
Okay,
maneuver.
no, because I see your name coming across and it's doing some red lines on the screen. Anybody seeing the red lines on the screen?
Oh, maybe I was just pretending. Maybe.
Okay, no, I just wanted to make sure it's you. I mean, it could have been a mistake, but I just wanted to make sure it's you. So I'm seeing a red line on the screen. Anybody else seeing that red line?
Yes, Miss, I am seeing it close to the word expense.
Right. So maybe your hand touched something. I'm not sure. All right. Just want to make sure it's not a hacker. All right. So you got it open, Abiathar?
Yes, Miss. Yes, Miss.
Okay, fine. So back to you now, Matthew. Matthew, you said NIS 3% of the gross, and I asked you, or tell me what you said.
I was saying that it would be 3% of the 150,000.
Mm-hmm.
You
Why?
asked why.
Mm-hmm.
And I figure it's because she make more than the threshold annually. So so this tax applies to her.
More or less.
Right.
Less. Because remember, if she goes over the 5 million for the year, which is 6.67, it means that she would pay the max. But as long as she's below it, she's going to pay the 3% on whatever she earns.
Right.
So as long as she's below it, you're going to calculate the 3% on her earnings. All right, so that's the explanation. Income tax. Nicholas.
Yes, I'm here.
You want to take on the income tax?
I'm lost.
You lost. Where did we lose you?
Where's income tax?
See it up here.
Okay.
But I have the answer there, but I wanted to explain it to us.
Okay, so she
How
make
did we get that?
150,000, right?
Yeah.
So 150,000 is well, 25% of 150,000 would be 956, assuming.
So
No.
150,000 times 0.25. That's 37,500. I hear somebody saying, no. That sounded like Tanisha.
Yes, ma'am.
What were you saying?
No, I was just saying no. So what are you saying?
Okay, so say why you said no.
Because you have to
Because
manage the threshold. But my answer I got, and not because I was driving, my answer is not the same as what you're saying right there. Because what I did, I would have less the 141 from the 150. Then I did the 25% of the difference, which would be taxable.
Okay, but you did not take out the NIS.
Oh, no, you did not.
Right. So Nicholas, what happens, remember we're speaking about that, is that you have the threshold. So the government gives you this amount where it says, okay, anything below this amount, you won't pay tax on. So the threshold right now is the 141,674, which is really 1/12 of the $1.7 million that we have now. So you take out that 141 out of it because you're not going to calculate any tax on that 141. So you take it out, and you also have the NIS as allowance, which was calculated before as the $4,500. So you take out the threshold, you take out the NIS, and it is what is left over that you calculate the 25% on. So right now, all we have left over is 3,826, and that is what we're going to apply the 25% on. Yeah?
No, okay.
So always remember to give yourself allowance for the threshold as well as the NIS. And remember, if you're paying pension, then you take that out too. So if after you are taking out all of this and you realize now that, you would have gone way below, it means that you wouldn't have paid any income tax. Right? So right now, the only amount that this person will pay income tax on is 3,826, not the entire 1.5. All right. So the NHT now. Who wants to take the NHT?
The NHT is the same. It's 2% of the 150.
Right. Straight basic, 2%. And then the ed tax now.
That would be Oh,
Okay. All right, go ahead, Tanisha. Since we have you. I know that
okay.
you're busy. Yeah. So tell
Right.
us.
So that would be the the growth. Say let's say NIS, which we already worked out, which is 4 5 from the gross salary and times it by 2.25, which works out to be the 3,273.
Correct. So for the education tax, we have the NIS as an allowance as well. So we subtract that from the gross before we do the 2.25%. And as I said before, remember that these are the rates that are given to us by the government. It's not just made up rates. And from time to time, they change. So we have to keep abreast on what's happening so that we know when to change, right? As we move from 1.5 to 1.7, and soon we're going to have 1.8, then 1.9, then $2 million. So as employers, we have to make sure that we know when the rates change so that we can do the changes to our payroll system. For persons who do manual, it might be a little easier. The persons with the automated systems may need to be doing some juggling to get these working. I know that that was one of the cries that persons were having because the rates kept changing so often. Because when it gets to the end of the year now, as an employee, as a entrepreneur to do your tax returns, you also need to know that it's not going to be just the 1.7. It is going to be a combination, like an average, as we had worked out in our previous example. Even though we were at 1.7, we had to use an average of 1.65 because the tax year is different from the calendar year. So the tax year starts at April, April to March, while the calendar year, which is what we file taxes on, is from January to December. And so you have a mix of the different rates. And so we have to average it out in order to know what to use as the threshold at the end of the year. All right. So we just need to keep abreast. Each time we hear something announced, we need to know when it's in effect, because it may be announced, but not necessarily in effect right away. All right, so we got those calculations. Then now for the employer. All right. So the solution is here, but I want somebody to explain to me what is happening. Just explain to me in your way what is happening here, what we're going to pay over. The solution is there right in front of you. I just need words to what's happening there. Who is going to take it? All right, come Abiathar. Explain to us what's happening there now. Abiathar gone? Nicholas?
Yes, I'm here.
Okay, tell us what's happening on the other side now with the employer. Just tell me in your own terms. You don't have to get all sophisticated. So just tell me in your own terms what's going on here now. You don't have to get technical in terms of terms and so on, but just tell me. We're over this side now. So we just calculated the person's base pay and we're looking at what the employer is to be paid. So explain to them what's happening here.
So as you said, the employer doesn't pay the taxable gross pay.
He doesn't pay PAYE.
PAYE. NIS percentage and the employee would be the same 3%. NHT 3%. Was it 3 or 2?
Where are you?
Over the employer.
I have an error right here, so
Yeah, there's an error, Miss Karen, so I was wondering why it's different.
yeah, 150. There we go. Sorry. I just looked up and saw it. Thanks. Sorry, Nicholas. Sorry.
Yes. Where am I? Education tax 3.5. They said it would be different from the employee. The heart. What is the heart, by the way? Because I don't understand the heart.
So it's just a contribution that is levied on the company alone, where you just pay 3%. So hard. I think it's the Heart Training Institute. Remember that these are not taxes, they're just contributions. So
Okay.
employers are required, as long as you have employees, you are required to pay 3% of the earnings over for this institution. The heart training.
All right.
So it would be like the institution at NHT where you pay over NHT, but it's just that this one is just employer that pays it.
Okay.
Mhm.
So, right at the employee, the taxable payment for everything calculated is 11,730.25 cents. So that is added with the employer's taxable amount, which is 18,592, totaling to 30,322.75 cents.
Right, and it is this amount that we're going to pay over
To the government.
the government. Piece that you withheld from the employee, plus the piece that you calculated for as the employer as your contribution.
When you say withheld, you mean not paid to the employee?
Right.
Okay.
Because remember, at the end of the day, the employee is not seeing that. I mean, all they're getting is the net pay in their hands.
Yes.
Right. So, I mean,
So basically
the
like
employer.
is this
go
like
ahead.
a pay slip for the employee and you're seeing NIS, NHT education tax?
Say that again, Nicholas. I didn't get that.
I'm
Sorry.
saying if it is like this is like a pay slip for the employee and you're
It is. It is
okay.
pretty. You said something, Tanisha?
No, just correcting him to say it's a pay slip.
Yes, it is a pay slip. So you wouldn't necessarily see the employer portion on the pay slip. You would see your amounts, and I think how I know the pay slips would go is that it has an accumulated amount. So you see what the year-to-date figure is that you would have paid over up to that point in time in terms of the various contributions.
What is it total to be paid over, to be specific?
Tell me,
I don't know, that's why I ask.
you're seeing it on the screen, the 30,000?
Yes, the 30,322.
Right. Which is the piece for the employee, plus the piece for the employer. So that's the 30,000.
That's what make up the totals, like the 9,000, the 7,500, 8,300 is the employees.
All right. This is a total.
Mm-hmm.
So okay, it's a total. You see the thing highlighted?
Yeah.
So it's E, which is the employee's portion, and nothing for the employer.
Right.
Then we go to the NIS, 4.5 for the employee,
Right.
4.5 for the employer. So it's just the columns going across. See here again?
Yeah, that's just what I missed out, was that it was adding both of them.
Yeah.
the correct total.
And
Final.
then here, it's just for the employer. And this 30 is the total, everything coming there. Or if you add this 11 and this 18, you get the 30. If you look down the bottom here, so you see the 30.
Right, so not everything transfer over, and a heart is an addition on the employer's side.
So employer do not pay PAYE. PAYE is just a tax on the employee.
Right.
Heart is not paid by the employee. It's just a tax levy on the employer.
Right.
Right? So
Government-related thing.
yeah, that's all that is.
Okay, thank you.
All right. So then, what would be the journal? Oh, what's something here? Tanisha, you see I mark up my screen?
Sorry.
I don't, and it's not moving. It's almost like it's on the screen, on my screen. I don't know what it is. Oh boy. Okay. No problem, no problem, no problem. All right.
Want a magic eraser?
I know, right? I don't know. I can't do anything about it. See, it just seems like it's on my screen. Okay, so remember now the expenses, and if you look above, you will see it. See the expenses for the employer. This is what we need to record in our books. Make sure you don't bypass it. It's an expense to you, so you need to know that it's going to reduce your profit. So this 18,592.50 as an expense, and these figures, which are the employer's portion, every debit of a credit. And so the 18,592 is payable to the government for the employer. And then we go down here now, and this is where we look at the total, which is what the salaries that were earned, because it's the entire amount that's an expense, not just the piece that you pay over to the employee. So it's the entire $150,000, which go to your salaries expense, the employer stats, which is the contribution that you pay over to the government on behalf of the company, is an expense as well. And here we have everything payable to the government, and 138 is due to the employee.
And this little section of just the debit and the credit and the taxes is the journal entry.
That's the full journal entry. So this is how you would record it in your book. Remember, the credits are liabilities. So it shows that you owe somebody. All of these PAYE, NIS, HEART, these are payable to the government, and this would be payable to the employee. So let me do things like that. So everything here, so here, so. This would be due to the TAJ. It's due to the TAJ. And this piece here, this net pay, would be due to Jody. Right? So these would be your liabilities here. So this due to Jody, this due to TAJ. And these here would be your expenses. XPMC. And this is also an expense, right? So this is how you would record it in your system. And know that sometimes we love to say, okay, because we never pay all of it, then it is not an expense. As long as it's not what you pay over, that's the expense. It is what you incur, what the contractual obligation is. That is your expense plus the employee's portion of statutories. So you see this one employee that you employed at $150,000 came with a cost, total cost of $168,000. All right. So that was that. So we're gonna look at, let me see if there was anything special about TAJ that I wanted you to see. Nothing special about TAJ that I wanted you to see. So we can scratch TAJ. Let us look at a last one before we go into QuickBooks. This one is really a weekly paid person, right? So still definitely. But let us say that she's getting paid on a weekly basis and her pay is $48,000. The same thing would apply. The only difference is that when we are applying the threshold this time, we would not use the 141 because this threshold is per month, right? So when we are calculating the taxable pay, it is going to be the $48,000, which is the basic pay, minus the threshold this time. It's a week, so it would be the 35,418, not the 1,417. So you have to be mindful about which payroll are you calculating. Are you calculating a monthly payroll or a weekly payroll? If it were a fortnightly payroll, then this would be times 2, right? So the threshold would now be 35,000, 41850 times 2. That would be the threshold if you were paying the person fortnightly. All right. So you just need to be aware of what type of payroll you have the person on. So in this case, it would be the 48,000 minus the 35, 418,440. All the other calculations would be the same. All right. So it is just a threshold that would be a bit different in this case. Okay. Okay, for persons calculating weekly payroll.
Check, full check.
Check, full check. Tanisha, know this.
These things are basic, you know, to know the percentages and the week amount as opposed to per month, depending on how you're paying.
Yeah, the threshold is
Right,
important.
right.
The threshold is important. And as I said before, you guys need to keep abreast of when there are changes in the rates.
How often does that change? Like annually or every couple of years, or them do it every month?
No, it usually comes from the budget presentations.
Okay.
So it's usually over there that these things are announced. But they may announce it and it doesn't necessarily take effect the same time you hear it announced.
Right.
So you may need to know the effective dates.
And where to go to find out if you don't catch the news?
Well, it is in the paper. And I guess if it's political, then it's all over social media. And JIS is a good place for that because JIS will have the news from the government. And the tax admin, yeah.
Okay.
I find that because sometimes they put up like workings and they have some bulletins, but they may not necessarily be up to date. So you just need to watch a date stamp to make sure that you're looking at current information.
Date stamp.
Meaning the dates that if you see an article, you don't want to be reading an article that is 2022.
Right.
Using that information. Right. All right, so then we are going to now move into an illustration. Do we have any more questions on this before we move on? Any more? You have the worksheet. The formulas are in the sheets. So you can just go through.
Find another way to get that worksheet though, because it's not pulling up on my computer. What kind of file is it?
It's an Excel.
Yeah, because I don't know if because I'm using on the Apple right now, it's giving me an issue.
Oh, I
We'll
don't.
try to figure it out.
I don't have
Talk to
Apple.
one of the guys about it.
Yeah.
Yeah, man.
All right. I don't know if
Calling one of
admin,
the guys can
if
get
you
it.
can send it to email.
Or what me have to
With
download.
Matthew and advise him when he can go about opening it.
Yeah, man.
Oh,
Give
you'll
thanks.
talk to
What
Matt.
I need to download, Colin?
You need to do one of two things. Upload them proprietary software for numbers. You can use that, or you can upload it and use Google Sheets.
The sheets.
Good. Okay.
Yeah, it's just because we have Yahoo and Apple and them thing there and Gmail use other Microsoft and Gmail and them kind of thing.
Nicholas is having a problem as well, Colin.
Yeah, we will get
Nicholas wasn't able to own the sheet either.
Issue, Nicholas?
Yeah, not able to open it, not sure why. It's saying,
What kind of device are you using?
well, I'm using my laptop.
Windows?
Windows, yes.
All right. So I guess me just talk to you after the session. You probably can send me some screenshots and we can work through it, all right?
No problem.
All right.
good. All good, Miss Karen.
All good. Okay. So we're gonna go now to QuickBooks. Does anybody currently use QuickBooks in their operations?
Not as yet, but I am leaning towards it right now.
Uh-huh. Anybody else? Tanisha, what do you use?
Could you repeat for me, please?
Which software you use in your business? Oops, not hearing.
Totally. Express, well,
Is that just for like receipting or does it do accounts?
it has everything in it. It has it has many other features.
Oh, so you can get a set of financials from it?
Yes, once the information is inputted in the system.
Okay. All right. So we're gonna look at QuickBooks though. And I find QuickBooks to be easy to use, user-friendly for beginners. Quite a bit of my clients use it. There are lots of versions to it. It is a subscription-based, available on cloud. I know that they're moving away from desktop versions. I think you can get the desktop version in a version they called Enterprise, but generally they are moving away from desktop and going to cloud. So I'm going to be walking you. I'm trying to log back in. I just got kicked out, so. I'm going to be doing a demo for you. and let us see.
I but miss, so sorry about that interruption, miss. Did I miss anything that I should have taken as note, please, before you log into QuickBook?
I don't think so. Where did we lose you though? Where did we lose you?
Right, as you were talking about the journal entry aspect of the employee section of the pay stub, miss.
Okay. All right. I'm not sure that it was, I was just introducing QuickBooks, telling you about QuickBooks. I was saying that it is a very user-friendly QuickBooks with a system which a lot of my clients use. I'll be walking you through it. Nicholas says that he's not using it, but he's leaning towards it. And Tanisha uses a different software, but I'm just gonna walk you through this and we'll see what you think. All right, I was saying it's subscription-based. You pay online.
Right, miss. Then when I see the prices, miss, it scare me. So I backtrack. I used to talk about QuickBooks from last year, miss, because I was a part of the NCB Level Up Grant Program last year, miss, and they taught us about QuickBooks. So, but when I see the subscription, miss, if you're not making money, you just cannot manage, and I don't want to start it, miss, and then got interrupt like maybe for a month or so, and then.
What was the price level you saw?
Around I don't remember quite frankly, miss, but it was around 1,300 US a year, I think.
Okay, so there are different versions of it. So it depends on which version you're looking at. That sounds like probably the enterprise, which is too advanced for your business. So you have to know which version you are using. So for you, a basic one should be okay. And you can go up. So if your business changes, then you can upgrade. If you buy one and you realize that it is too much, you don't need it, then you can downgrade.
True,
So
miss, I'm seeing one for $9 euro a month for 3 months.
Euro.
I'm seeing the euro sign, I'm not seeing a US dollar sign, miss.
Okay, I don't know where you are. Okay. All right, let me just bring it up and see. I'm just bringing it up to see if just to show you, and then we'll move on. All right, so you have I have no idea so see, this is new. So they're here displaying the prices in Jamaican dollar, right? So if you see, are you seeing my screen?
Yeah, man, we can see it.
Okay, so if you see the screen, you'll see simple start, 1,537 per month. This is Jamaican dollar. See here, currency displayed in Jamaican dollar. But when they're billing you, they will bill you in US dollar, right? So you have the simple start, and the simple start, see the different things that come with it. The simple start does not have multi-currency. So if you want to bill persons in foreign currency, that doesn't have it. So you know that you would have to go to the next plan, which is simple, which is essentials. Essentials have what's different, multi-currency, manage bills and payments. You have up to 3 persons plus your accountant. So it depends on your needs, right? See, this one is 3 plus is 3,161 per month. This one tracks inventory. So if you have inventory, then plus would be good for you. Advanced, no, advanced, very advanced. $6,005 a month. None of us are at that stage. Up to 25 user with automated this and all right. So if you go on, you will see the different plans that they have, and you can figure out which one is better for you. You can start with simple start, and if you decide, okay, I need more out of it, then you can upgrade to select. Suppose you upgrade to select to essentials and you realize, okay, I don't want to do that anymore. You can downgrade back to simple start. It allows you that option. All right, so that's where we have the options. So I'm just going to be walking through with you some of the things that you can do on QuickBooks. All right, so I'm using a sample company. So I'll be just doing something, so change it around a bit, and then we can see how we can do entries and so on. All right, so here, this company is called Craig's Design and Landscaping. That's their company. So that's not my company. I want to change it. So we can go to account setting on the dashboard, and we can change the name of the company. I had it all set up and it disappeared. All right, so my company is what did I call my company again? So it's Tanisha, Matthew, Nathan, Nathan, Nicholas. So it's T-Man-T. That's what I had called the company.
No, Miss Karen.
What
Fix up that
happened?
man tea there.
Huh?
Fix up that man tea there, man.
Oh, Lord. All right.
Yes.
All right, so this was the name of the company. I'm gonna put a logo. And your logo is good because you want your logo to come out on your invoices and all of those things, right? You want to have a presence out there when you have your documents. So I came up with a logo and just waiting on it to attach, and then I'll save it. All right, and then in this section, your account settings, you put in all the information that's needed. Your name, your address, your tax number, and so on. So you fill out all of this section here with your information, your company email address, and so on. These things, whatever you put here, they will come out on your invoice. So this is where you start setting up your professional invoice on, right? Your legal name, your trading name, and so on. So I just, I don't want to leave without saving. I want to save, right? So this company is called T-Man-T Variety Store. And I will just refresh it so that my setting, what I created, came up. All right, so this is now the company, T-Man-T Variety Store. Matthew loves that name. All right. Shauna, Matthew, Abiathar, Nicholas, and Tanisha, the variety services. All right, so this is your dashboard. This is pretty much where you go to find all of the various things that you can do with this company in QuickBooks. All right. We set up the company information already. We put in our logo, we put in our the name of our company and so on. So here to your left, you have the dashboard. You have the menu. And the menu here, if you just toggle on the menu, you will see the different things you can do. So you can do bank transactions, receipts, you can do your bank reconciliation, you can set up your chart of accounts. I soon tell you what that is. All right, you can do your transactions that you know occur every month, right? You set them up as recurring transactions. You can do your sales on sales, you can see your sales invoices, your estimates, you can do sales order, you can do recurring payment. If you know that you pay somebody the same time all the time, you can set it up. You can set up your customers, you can set up your products and your services. So this would be where now you have different services. So you may want to, let's go to Nicholas for a moment. You may want to say, okay, you price your products differently. So you want to separate them, right? So you may have driving lessons, right? Basic driving lessons. That could be a product. So when you're going to do your invoice, it is going to say that. So let me just do that a second. So this is where you set them up. So you go to new, and it's not an inventory item, it's a service you provide for persons, and you want to call it basic driving, right? And that would be your the name of your service. So let us say you want to set up your chart. So you want to put all of the driving things under one thing. So you want to call it driving, right? So that's what you have. And you go down and you see the different ways it is going to come out under services. Now, the way how QuickBooks is set up, when you start a new company, you have the flexibility to choose the industry you are in. So for instance, if you are in, let us say, driving classes, driving instructor, then you may go on it and you may see driving instructor. Not all of them are stated, but you will find something that you can use in your business. What it does when you select that is that it gives you what we call a chart of accounts that matches that business that you have. What is the chart of accounts? The chart of accounts is just a list of account names that you can use in your business. So you would have things like revenue, you would have your assets, you would have your fixed assets, you would have your bank, you would have your receivables, and all those things, basic things that would be associated with the type of business that you are in, right? If, for instance, you're in a construction company, then you may find construction terms in the chart of accounts. So whatever you choose, you'll get those terms, but they don't have to stay. You can modify it because the chart of accounts allows you to modify the names of the transactions. All right. So I was just setting up this here thing for Nicholas's service of driving, right? And he's going to put it under driving, and it's a service to him, and we just save and close, and we come out of it, and we have it in the chart of accounts. If you go, you want another one. And let us say, I'm going to use inventory. So let us say, ABFR's gloves.
I can use same myself, same Nicholas selling driving books.
Driving what? Books?
Books, yes. Driver's guide.
Okay, so your books would be an inventory for you as well.
Right.
All right. So it would be set up the same way as I'm doing gloves. So you set up gloves, and the SKU is really if it's going to be each or per peer or whatever it is, right? So let us say and as I said, the categories would have already been set up here because of the type of business this was. This sample company is actually a landscaping company. So that is there. So if you want to set up another category, let us say you call it general supplies. Then you can add it. It just allows you to put the things in, which is one of the things I like about it. And some of the things, see, it already sets it up as an asset because you chose that it was an asset, that it was inventory rather. So it automatically applies it. it defaults to sale of a product item, product income. It defaults there, but suppose you want to change it and you don't want to call it that. So let us say I change it and I don't want to call it that. I want to call it, oops. It creates the sheet for me. So let's say I want to call it right? When you see the arrow, it means that you can pull on. If it is not there, you can always add to it. So let us say that's funeral supplies and I close it, right? And I save and close and I get out of there. It's asking me for a quantity. I don't have any quantity on hand, 0. Save and close. What is not right? What's wrong with you now? Oh, a date. So it wants me to put in a date. So let us start again. All right, so it puts it there. Right, so that is where your chart, let me just bring up your chart and I'll just show you some of the things that are on the chart. So it comes preset. And you see the different things that come on the chart already. See here, you have your loans, your retained earnings, your income, your material. So this is, as I said, specific to our landscaping business. See all of these things, but you can apply whatever you wanted to. I added something. Let us see if I see it. The funeral service, where is it? It was on income. Right, this was the one I added. Right? So you can go in and add whatever it is you want to add. And that will, you will create your chart. Legal and professional fees, these are expenses. So if you have additional expenses that are not here, then you can always create them yourself through what we call the chart of accounts. All right, and it's a big chart and it can hold based on the product listing that I saw one of them that has unlimited items on the chart of account. It also allows you to add, link your bank information to QuickBooks. So you see here, you can set up your bank accounts and you can link it. What will happen is that it will automatically update your QuickBooks. When you do the transactions, it will automatically update your bank account. And you can do the reconciliation from there. All right, so those were your just a brief synopsis of the chart. You have things like your invoices. So your sales invoices, for instance, you're selling something, you go to sales invoices, right? But you need customers. One of the things I like about QuickBooks is that you can create the customer at the same time you're doing the invoice. So you don't necessarily have to go and create the customer and then save it and then come back and do the invoice. So if, for instance, I'm here now and I want to do an invoice, I don't have the customer, but I want to do an invoice. Sorry, my navigation here. So I want to do the invoice. See, I'm on sales and there are some invoices in the system already, right? And I want to do a new invoice. I just go straight to create invoice. Right? When I go to lots of pop-up, if you notice, my invoice is now showing me the name of my company. And if I put in the correct information, it would be here. If I put in my email address, it would be here. And see my logo here. All right. So whatever you put when you're doing your setup, it's going to come out nicely on your invoice. So I don't have a customer. So this is a list of customers they have, but I want to invoice somebody else. So I'm calling it, I don't know. So I'm adding mixed snacks wholesale, and see, it just allows me to add it just the same time. It's telling me, okay, the customer is not there. And so it automatically fills in the information. If I have the address, I can put it, oops. I'm just gonna put this, the name as the same, right? And if I have other detail, I can put it in there, the email, the phone number, and so on. Now, it is good when you're doing your customer invoices that you have an email address, because what it does, it allows you to send your invoices automatically. So you can do the invoice, and then you can just email it to the person same time, right? Or you can set it up to text them the information. Whatever you choose, whatever you want to do, you can set it up in the system. All right, so you put in all the information, the billing address and so on. If you have any information you want to put about the company, you can also put it there. The terms of their the relationship with you, whether you're selling them as a cash customer. See there? Do you want a receipt or 10 days or 30 days or so on? You can do all of that right there, right? And when you are finished, let me just put, do you want a receipt? And then I'm just gonna save. Right? Now, if you were doing if you had a foreign customer, when you set up the customer, it would automatically ask you if it is to choose the currency. So if it's a US dollar customer, you would just select it. All right. So all the information that I didn't put in would come under here, the address and telephone and all of those things would come under there. All right. The terms automatically come up because I set it there. Because the due date is on receipt, if you notice the invoice and the due date are the same. If I had changed the terms, so let us say I change the terms to 15 days, if you notice the due date changes. All right, so it just operates. And what this does is that when you run your list of customers who owe you, then you can see if the thing is due, if it is due in 30 days, if it's due in 15 days, and so on. You can see the different times that the payments are due to you. All right, so this is the invoice. So you go down here to your product or your service. Now, I think I put in gloves, but I never had any, right? So, but let's say we have gloves in there. So I don't know what it is. So if you notice here, description doesn't have anything. So when you're filling out your information for your inventory, you need to put as much information as you can, because when I pull gloves, it would automatically fill out the information. So if you have, for instance, the gloves are sold at a particular rate, when you're setting up the inventory, you can put the rate in there. You don't have to type it in. Now this will help you in your business to prevent fraudulent transactions, right? So people don't go in and keep changing the figure. So let us say funeral gloves. I didn't fill out the information, but let's say I'm selling one and it's $150 for a glove, right? See there. Is it a taxable item? If it is a taxable item, then when we are doing our setup, we can set up and put tax. If it is not, you click off tax. See? What is our tax rate? And then you would apply the rate to it, and it should, oops. And it should calculate the tax. Right here, I don't have any tax on here because I did not set up a tax rate. All right, but you would pull your tax rate here. In fact, it is supposed to be defaulted to Jamaica when you set it to say you have a taxable product or supply. All right, so when you're finished with this now, this is your invoice. Anything you want to add, anything you want to say, of course, you can set up all of this thing from behind the scenes. So if you want to write on your memo, to say, or you want it to show on your invoice to say, okay, thank you for your support, or anything you want to put on invoices. You can put it there in the back of the screen and then it will automatically show here. Right? So whatever you want to you can tell them how to pay. You can set up your banking information to say, please pay to Team and T. Banking information is this, that, whatever it is, and it will go on the invoice. So let us just review this basic invoice that we did. Let us see what it looks like. And it's loading. See, different things you need to change in the background, because here he's coming out saying Craig's did sign. So we'd have to go to the back and ensure that all of the information that relates to our to our business is written there. I'm trying to big up this thing so you can see it. I'm sorry, I'm trying to. This is just tiny, but you can see, right? Here is the invoice. I trust you're seeing and you're still there. Here's the invoice. This is your invoice. This is your logo. This is who you're billing. This is who you're shipping to. This is the invoice number and the terms, the invoice date, when it's due, what you're selling, any note that you want to say to the customer. Thank you for your business. Have a great day. This is the price. Tax was there, and that is the tax, and that is the total, right? And when you are finished and you're comfortable, you send your invoice. Any questions on that? I mean, this is just basic things that you would see in when you're doing any regular invoicing. Any questions on that?
No questions so far.
Yeah, good to go.
So you see how you would do your invoice, Nicholas? You just set up whatever it is your service is. You can put your price in the back of it, and then when you're ready, you just invoice, you just pull it. And guess what, guys? You can use it on your phone as well.
I'm
So as
currently
long
setting up mine right now.
huh?
I'm currently setting up mine right now.
Right. So when you go to your phone, you can just download the app and you can do your invoicing through there, and you can send the invoice to the person's email and so on. All right. So this is how the invoice would look. And you can, as I said, different settings there. When you're sending your invoice, you can tell the thing, look here, send me a copy. So each time an invoice goes out, you get a copy in your inbox. So you will know that an invoice went out. All right. So this is what your invoice would look like. All right. And of course, I'm just going to jump to report and show you something. If you go to report and you go to, and this is going to be using the data in there. So there are different reports here that you can look at. You can see your balance sheet, cash flow, profit and loss, all of those things. And it says business overview here. Then it says who owes you. So you know that it's your receivable that's here. Sales and customers, you see all the different reports that you can get about your customers. What you owe. This is everything about the bills that you would have entered for people who you owe. These are your expenses, your tax, your employee. Well, we don't use the payroll system because it's different from overseas, but you can use it like as time to capture time activities. And then if you have an accountant, so on, we don't use the payroll. So I was just going to who owes you. So I'm going to just print a report to show you something. All right, see here. This is your inventory, your receivable summary. So it would show you all of who owes you monies. I'm trying to find mixed snacks. I don't like this option. Normal people. I don't like this option at all. All right, I'm just trying to get down to find the knickknacks where we were, but my screen not moving. My screen is not moving. I'm not sure why my screen is not moving right now. I wanted to show you the one that we created, but this thing is just not moving right now. Seem to find my cursor to go down. All right, my cursor refuses to go down, but what I wanted to show you, let me see this. Classic view. I love this. All right, so if you look, see Nick Snaps here? This was the one we just entered. So you will see that it is current, and current because we had set up the term to say immediate. Right? So we had just set it up here, and if you double click on here, it will take you back to the invoice. See, you can see the invoice that we created. Now I had 15 days. Okay, so it's current. All right. Okay, so that's where you would go to see who owes you. Report is right. This is where you would go to see, okay, 5,445.17 is what is due to you, and these are the different people that owe you, right? And as I say, in the middle, there is Nick Snacks. You can see what it has is an aging, so it will tell you how long past the due date is. So like this person, Red Rock Diner, they are 60 to 90 days past their due date. So you know that this is really, has really been a long time outstanding. When you know are looking at your receivables like this, you want to say, but hold up, they owe you something that is way overdue. Why are you selling them something again? You need to go collect this before you start selling them again. And you can use these reports to make decisions as they relate to your customers. All right, so that was the AR aging report, which tells you about your customers. All right, so QuickBooks allows you, right, to go and to do a demo. So you can always go on and do a demo to see if that is something you want to use. All right. I'm going to show you as well your vendors. So that would be your expenses. So your vendors. So this now is where you get your, you enter your source documents now. So your invoices that you buy things for, you need to record them here. So you go to add bill, and it is similar to how you do the invoices. So you would go to add bill and you would create a bill. And this is where you would go wherever you buy your funeral supplies from. And I keep using you, Abiathar, I guess, easier to find a supply. All right, let me use Matthew. So Matthew, a vendor, you could use, let us say Sun Island. I don't know if that's where you buy your shirts, but you use Sun Island. It's not there, so we add new, just like what we did the first one when we were setting up the customer. So Sun Island is the name of the company that you're buying from. You set that up. If it's not there, this is not two different names. It's a company, right? You put in your email address and so on. Let me just put in and something. Sun com, right? 876-589-8795. And the website. And you put in whatever information. All right, and that would be it. Any other information, the terms. So if there's a payment term, 10 days. If it is, you know, that's okay, you buy shirt and all your shirt going to promotion expenses. You can choose to set it up from here. Let's call it advertising. Let me see if promotion is there. Okay, so promotional, you put it there. So it is going to automatically go to that account when you enter something from Sun Island. Nothing else to put in, you save it, right?
And automatically classify it as an expense.
As that particular expense. So I'm gonna pull something and show you. So let us say, so if you notice, I put in the information and it's filled out here. Sun Island as the vendor, the address went in, the terms, and so on. So let us see. No. If you notice here, right? The vendor category here has the thing set out in two different sections. It's category or items. So category would be if you're doing like an expense, it automatically come up promotional. If it were item, this would be where you're buying things like inventory. So if you were going to buy, let us say, t-shirts and you call them inventory items, then you would have to set it up. So let us say it was gloves you're buying from them, right? You would enter it under this section. But it is not gloves you're buying. You're buying promotional items. So you don't use this category, this section, you use here. So you have promotional, so you can
because it is not an item for sale, right?
Right, it's not an item for sale. It may be just something that you buy because you're going on an event and you want to use it as advertising. So you're having 50 Jam Life long sleeve shirt for, I don't know, for a big ship promotion. And you write a description in there because it will help you. It will help you in the long run when you go back and you want to say, okay, what was this again? Right? So you have in the big ship promotion and you have 50 Jam Life long sleeve shirt and you paid $50 for them. $5,000, let us say you paid $5,000 for them. All right, and that is it. And you save it. Right, so that is now, this item is now set up under Sun Island. Like I did for the other one, you go to reports and you can look at your report to see, okay, who is it that I owe? And when do I have to pay them back? So again, this thing is set in category. It is now who you owe or what you owe. So you go under this reporting category and you run your report. I'm switching to the classic view because I don't like that view. See, and you see Sun Island here for your $5,000, right? So again, when you look on your report, you run your report as of today's date, and you can say, okay, as of today, $6,602 is owing to my suppliers. These are their names. This one way overdue. Not sure what it is. It could be you returned something and they didn't record it, or something spoiled, or an error in your accounts, or whatever it is. So you will see the information here, and you will know, okay, how to set up your monies. How are you going to pay for this? What else do you need to sell? What do you need to hold back on? And who do you need to pay? All right? Making sense so far?
Yeah.
Yeah. So remember, all your source documents, you're going to take them, your invoices from your suppliers, you're going to take them and you're going to enter them as invoices to your suppliers, bills. They're called bills in here, right? So you're going to enter your bills because you want to know that you are recording everything that you owe and everything that you own. So you want to make sure you bill your clients, and then you want to make sure that after you bill them and they pay you, you don't take the money and put it in your pocket. You now need to record it on their invoices that it was paid, or when you actually pay the person physically, you need to pay it on the system. So let us just look quickly at how we can pay, receive monies and pay. So let us go back to the invoice that we had done for Nick Snacks, I think it was. So we can go back to sales here and we can search for the invoice. So let us find Nick Snacks, and I should be able to find it. I'm trying to find the screen for my search bar, and I'm not seeing my search bar. I'm not seeing my search bar. Oh, okay. Let's go today. All right. So here's Nick Snacks, the one we did today. All right. So let us say you got the money for it. So you find the invoice and you go right here and you go to receive payment. You can view the invoice if you want. So you can do it two ways. Let us view the invoice. When you view the invoice, you look, you make sure, okay, everything is okay, right? At the top of it here, you will see receive payment. So you can go here and receive payment, or you can go to the front where we were, right here, and receive payment. It will take you to the same place. So you receive payment, right? And when it comes up like that, you make sure that you put in the correct date that you got the money from the customer. You can choose how they paid you, whether they paid you by cash or card, credit card, whatever it is, right? And you can choose to deposit to your bank account. So you would have had your bank account set up, right? NCB or BNS or whoever it is. So let us say this was BNS. I just use that bank. So this is where the money would be deposited to. So you enter it. You just choose it, click on it, right? That's the account that it's going to. I didn't choose my method of payment. So let us say check, right? Now, if you have a reference number, you can put it here. So if you person, whatever, 0015, to put it in here, that's reference. So when you're ready, you can go and cross-check your information. If somebody said, oh, they paid you or they didn't pay you or they paid you with a particular check or so on, you can use the reference to search for the information. All right, you see, because we're on the invoice, what the system does is that it defaults to the entire amount of the invoice. So this invoice we had done for Nick Snacks was was $150 plus tax. So this was the total amount. So what did you receive? You need to be careful here because it's the amount you receive that you're going to enter. So if you receive all of it, then it is fine because that's what the default is on. But suppose you only got $50 because the person said, I don't pay tax. So you got $150, right? $150 out of the 165. If you look down the bottom here, you will see the original amount is this, the open amount is that because none was paid yet. The payment amount is $150, right? And then all you would do here is just save and close this, right? And that's what you get. You put it, you got a check, it was a CIBC check, you got it on the particular date, which is up here, which is today, right? And you're finished with that, so you're gonna save it and close it. And that's it, right? And that's gonna be it. So the next thing you wanna do is that you wanna just look back here on your report to make sure that it's reflected. So we're gonna go back to, what did we do? Sell them, right? Yeah, so we sold them. So we want to look back at our report because we're not supposed to be seeing the entire 163 anymore. We are supposed to be seeing the difference. See here? You seen that?
Yes, miss.
Yes, miss.
All right, so you can see now that Nick Snacks does have that. If you go and you if you're just looking at the report and you're like $13.65, what would I sell for $13.65? I don't sell anything for $13.65. So you want to open back the invoice to see what's going on there. So you open the invoice. Here you see that the original amount was 163, and now you're seeing this. So you can double click on it and open it. And then you will see amount paid, $150, 1365 due. So you can look on it and you can say, see, you're looking down here, see there? Invoice total that, amount paid on this particular day, this is the balance due. So then you can go now and start investigating. Why didn't you pay the tax? Is it that you should not have charged them tax in the first place? Is it that they have an exemption from tax? Or is it that something was wrong with your invoicing or whatever? In that case, you need to fix it. All right? If it is that they really owe you, then you need to pursue it. All right? So you can, the links are friendly. They can, you can change them. Suppose you realize that, oh, I shouldn't have charged in tax. You can actually go back and amend the invoice. That's one thing I don't like because it allows you to amend the invoice. Right? And I think people can mess with your invoice like that. Okay? So that was it. So that was how you pay you receive the money from your customer. Likewise with your vendor, you go back to your bill and our person was Sun Island. So we can open Sun Island. This says scheduled payment, so you should be able to pay from here and you would mark as paid. But let's open the bill. And it's going to be this similar to what we did before, where we are going to, where is my thingy? Where is my, okay, you click the bill. Oops. Trying to, okay. Payment, mark as paid. So when you click mark as paid, this is how it comes up as bill payment, and it's going to be the same thing. So how did you pay it? Did you pay it from your savings account or your checking account or Visa card or MasterCard? whatever it was. So let us say you use the MasterCard. When did you pay it? You paid it today. How much did you pay? You either paid all of it or half of it or whatever. So you change the amount. You change the amount here, so where you have payment. So I'm paying 4.5. Notice it changes up here. And that's it. Nothing else there. And you just save and close. And if you look to the left here, the figure just automatically changed here, right? So if you run your report, you are going to see just the $500 because the 4,500 was applied. So it's what you owe. And Season Island, you now have $500. All right. So that was just going through the invoices, invoicing, and doing your bills. Nicholas, you got any further with your setting up?
Yes, I am really stuck at where it says the input the bank account information. I don't have a business bank account. I have one setting up soon, so well, it's in the making right now. So I'm just waiting on that to finish up.
Okay, well, I mean, the business bank account, that bank account information would be pretty much if you want to be to connect the thing online, you don't have to set it up to be automatic, you know.
Okay, okay.
Because reconciliation can be a problem if it is not set up properly. All right. We're gonna look. I'm gonna bring up now the balance sheet, the income statement, and the cash flow. I just want to show you. So reports is where where you run all of these financial statements from. All right. So if you go to here, and you can favorite the things if you don't want to be going through the whole list of things. So let us look at our balance sheet, for instance. I remember this is the information that is in there already. So you need to make sure that your information is set up properly. I'm switching to classic view because I prefer using that than this new view that I have. All right, so you see your assets, your liabilities, and your equity. You see all of them there. 23,599, 23,599. You have a balanced balance sheet. We did make some transactions. Let me see, in the checking account. Which one did we use for the payments again? I don't remember. Let me see. All right, see our thing here for Nick Snacks. See it in our bank account here. I remember that we collected $150 from Nick Snacks. Here it is in our bank account, right? And you can see, just looking on here, you can see all the other transactions that came with the system, that came in and out. So the income coming in, these are the debits, the expenses. So it's going out of the bank, so it's a credit. So you see all of them, all of the transactions that you would have done coming out of the bank account. All right, and so you can go in and review to make sure that what's going on here is exactly what is happening on your bank statement. So that is where your reconciliation comes in. You take what you put in the system, you take your bank account from the bank, you compare both of them to see if both of them are saying the same thing. All right, so that was the bank account. Let us see what else is on here. kind of a little slow. I just don't like this view at all. Okay, so they're tweaking with their view, how you see the thing. I don't necessarily like that view. All right, so you see all the other things that are there that this company would have had. This is now where you would go and look to see, okay, how am I doing? You remember what the balance sheet does? It tells you the health of your business. So you would go in and see how much you have in receivable, how much you have in the bank, how much you have out there to collect, how much you have in inventory. Undeposited fund here is really monies that need to go in the bank. So this is a part of your bank account. What of your assets? What do you have as fixed assets? You see your truck here. Where is that? I just saw it. You see your truck here, and you see your truck at cost there. Then you go down here and you see what you owe people. You owe $2,102 to whoever, plus you owe $4,600 on your MasterCard. You have that in loan and so on. So after you put in your information, you will see all of what is happening. This company is running at a loss. All right. So that is your balance sheet. And remember, it is all your information that is coming here. So if you put in the wrong information, when you are ready to view it, it is going to look strange. It is not going to make any sense to you because the information is not correct. So here it is. This is your profit and loss account. Start out with your income. So see all your income here. See your funeral service supplies that we had put in. See it here. It's income and it would be up there. And you notice that this account is set up with the design income discounts going against it. Your funeral service is separate, your landscaping service is separate. And then you see the cost of sales. These are all the costs that go into the landscaping business, which are directly tied to the landscaping business. The fountains and the garden lights, the plant and soil, sprinklers and drip system. You see, these are directly related to what they do. Then the labor as well. So all of these things would be directly related to what they do. All right, and then you come down here now and you see all the other expenses coming down, the advertising and the fuel and rental equipment, accounting services, legal services, and all of those things. You see coming down here, and at the end of the day, you see that the company making a loss. All right. Are we seeing anything from what we would have done in the earlier classes? Seeing that on QuickBooks?
Yeah, man, and how the program actually doing some of the work, doing a lot of the work actually.
It does all the work for you.
As long as you're logging correctly.
So you remember we were talking about after you got the source document, you got the journals. This dashboard gives you everything. So you go on where you have new here and you would find journal entry. I mean, what I'm touching is just a little bit of what QuickBooks does. So you'd go on journal entry, and this is where you would put in, for instance, you remember when we were talking about our employer stats, what the employer would deduct from the employee. So let us say this is employee stats. Of course, it's new, so it's going to tell me that it is new. I'm going to set it up as it's an expense. What kind of expenses is it? It's more like payroll related tax, right? and it comes up there automatically, and I just save it. So remember when we were looking at the chart, let us say it was $18,000. You put that in, and this is that was the debit. And then we go down here now and we create the credit. And it's a liability because you owe the government. It's a current liability. And I find the correct place. It's a payroll tax payable. So you see some of the things are already there. So you just pick them up. You know what it is you are doing. I'm just quickly doing a sample of what the payroll journal would look like. What was this again? It's a liability. And it's a tax. Save it. And NHT. I don't know. I'm just making up some figures. All right. And as I said, the beauty about this, or what I like about this, is that it allows you to create the account as you go along. So you don't have to, get frustrated when you look and you do not see the account number and you're like, but it's not there. And, it just allows you to do it at the same time. I love that. I'm just going to do the last one after this. I just wanted to do it so that I show you how it comes out in the accounts. So tell me something now. Where do you think I would find these accounts? Where would I find these part NIS and so on? Where would I find them in my account? Which one of the reports would I need to go and look at to find it?
Liabilities.
Right. So all of these. So where would I find my liabilities? Which one of the statements would I find my liabilities on? A balance sheet, right?
Correct.
Yeah, my balance sheet. So I'm gonna this is the last one. HEART. So I'm saving it, right? And if you notice that it's balanced, and then what QuickBooks does when you're doing the journal, it is automatically balancing it for you. So if you put in 18,000, you put in a new line, it is going to put everything as 18,000. So you have to keep splitting the figure. So it will automatically balance. If it is not balanced, it is not going to save the journal, right? So here, all I'm recording, this is the expense, and these are the liabilities. So I'm just gonna show you before I dismiss you. Hopefully, when we meet one-on-one, we can look at some of the things that may concern you. All right, I'm just refreshing the list so that what I see will come in. All right, so I put in the where is it? The expense rather. See it here? So this is where my journal, what my journal did, it put it in expenses, right? So that's it in my profit and loss. And then I will just show you in the balance sheet and we will end on that note. So in my balance sheet, switching to the classic view, and it was NIS, NHT, and all of that. See them here, right? And they fall under liabilities, current liabilities. So I can look at my balance sheet and know that these things are owing. All right. I know that was a lot. And the idea was really to get you familiar with QuickBooks. QuickBooks is, as I say, easy to use in my opinion. It's widely used. I believe that the support, the online support is good. And so if you're looking for a system to use, I don't work with QuickBooks, but that is something that I find useful for small businesses. All right, so I will end there for today. I will be in the session tomorrow, but I expect that you're going to be there and asking your questions, right? You don't have to be necessarily specific, but if you have a specific issue, then you can try your best to, to set it in a way, if you think you're going to implicate yourself, to set it in a way that you can get a good response for it. You can check to see whatever resource they have if you're having a particular issue. So I will be there, but you are going to be the ones asking the questions. And then you'll be talking with Colin in terms of when you will be available for your sessions. It's max